All right, Shredder. So onto my screen, the first pair on the list here is the pound sterling. Ideally, in recent times, I've been highlighting the pound sterling to the downside, and I did actually point out the chart pattern I was actually noticing here. Now, before this whole recent development, we had a very bullish run on the pound sterling where the pound was just making series of high highs and higher lows, and it continued on that trajectory until we actually got to a point at right around 1.3750, and then we started to put in a lower high from there. So this was a lower high from this other high, and then this just started to melt to the downside. So as things stand here, we've actually hit a very crucial point, which will always be the deciding factor for the pound sterling's next direction. But all things being equal, going by what we are actually seeing here, we should see the pound sterling collapse nicely all the way back down in the event that we do actually break below this neckline here, because by the time we get down to the weekly time frame, which I like to actually do like a top-down analysis approach, you can see that we actually got out here and then we failed to put in a higher high. Instead, we actually did come in to put in a divergence here. So this is a lower high from here, and then this is technically a chart pattern which happens to be a double top. So you guys know that if you get a weekly time frame chart pattern formation and then it now materializes, the market tends to move in an exponential manner, and in that case, I think the only bone of contention here will be this neckline. So should we see the neckline break on the pound sterling, this will significantly expose this guy to the downside, and in the event that actually happens, my first take profit will be at this base here. So this will be my first take profit, like so, at 1.2704. All right. So once we see a clear break out of this neckline here, okay. Now, however, in the event that things do not actually go in the way that we actually want it to, in the sense that if this market actually fails to break below here, which I doubt, but in the event that it does actually fail to break below here, we should actually be seeing the pound sterling pull back into somewhere around here, like so. Then I'll be back to let you guys know exactly how you can actually capitalize on that. Now, for the pound sterling, it's very simple here. Any collapse we get from this neckline here, once we are able to see a decent break below here and then pull back, we'll definitely see this guy melt all the way down. But before then, I think we would actually see the pound sterling pull back up, all right, because this was an impulsive drop, like so. This is a linear impulsive drop, so the market will most likely want to correct. So once it corrects, then we shall actually see the final leg down, and then I think upper week we would actually be here to actually finally look at this guy closely to be sure that this level is about to be broken, or it wants to actually hold and then reverse price. So it's a 50-50 point at this point. So it's a 50-50 outcome. There's every high probability that we can actually see this guy reverse from here, and then there's also a very high tendency that this market could literally just melt and then continue lower. So that's that for the pound sterling. So now this is a very dicey position to be in as a trader, because you might be tempted to take this trade. I know what the day traders would do. So it's a very simple setup, but I would actually advise you guys to be very careful here, because at the end of the day, you are actually trading right into a brick wall, and you really do not want to be on the wrong side of this move here. So allow the market figure out whatever thing it wants to do. Allow it decide. Okay, if it's gonna go higher, it will let you know. If it wants to go lower, it has to break this neckline. Once it cleanses this neckline here, you got space to the downside, and this is how you trade. Because one of the things that people fail to understand about trading is that if you first of all protect your capital and then you grow it, you cannot grow what you can't even protect. So it's always capital preservation first, capital preservation, and then growth. All right, you don't grow and then preserve, you preserve and grow. All right, so, and quite frankly, I did actually spot something which I would honestly want you guys to take note of. All right, so as you're planning to go short this guy or go long, whatever thing that you decide to do, so if you look closely, this is the weekly time frame. Now we had a low here. Okay, we had a low here, and if you try and connect the bottoms from this very bottom here all the way to this point, you can see that the market has a lower high, a higher low rather formation. So this is what it looks like here. So this is a higher low, so this is a low, this is a higher low. So even if we're going to short this pound sterling, it's still dicey here, because this is a factor that could really reverse this guy to the upside. So this is just me pointing out every single what is and what not for the market, so that as you trade, you're careful. You have this at the back of your mind that once this market should the market break this neckline here, you are careful about this trend line here, because this could easily hurt you, all right, hurt your account. So that's, I mean, from my experience, it's always the little things like this that you avoid that end up, causing stressful, trading periods. Yeah. So I think that's just that about the pound sterling. I'm not sure. I don't really think there's anything else to discuss about the pound sterling. So I'll be back here once this guy breaks this neckline. Once you see a decent break below here, then we're actually good to go. I mean, technically, we are actually good to go so far as this trend line, cooperates. If it refuses to cooperate and then now blows the market back up, there is absolutely nothing we can do. Yeah. So I always pride myself on capital preservation, guys. You need to protect your money first and then grow it. Yeah. So you must be very, very careful with these trades. Okay. So I think that's just that about the pound sterling, to be honest. Again, we have an ascending trend here. So I mean, this it's dicey. Yeah, it's very, very dicey, and I'll urge you guys sincerely to be very careful with your trades. Yeah, be very careful with this pound sterling. Yeah, allow the market pick a direction, preferably. Yeah, let it actually break below this neckline. Once it clears this neckline, because that would pretty much be the only factor left here. So once it clears this neckline here, we know that the only thing left will be this trend line, and then you can short from here to here and make a decent amount of money. So I think that's just about that. What do you think about the pound sterling? Yeah. Now, on the other hand, here we have the euro dollar, which I actually spoke about last week. Last week video, I came on here to talk to you guys about the euro dollar, and then I said to you guys that I wasn't really interested in going long on this pair because it wasn't looking like my favorite kind of setup, to be honest. I mean, why would I want to go long here when there is a downtrend and then there is a supply level here actually pointing to the downside? Yeah, it was a bit dicey for me, and you guys know me, I'm not one to hop on any random opportunity I see. Yeah, so now for the euro dollar, yeah, we did actually try to go higher. However, post FOMC we actually collapsed all the way back down. So what simply happened was a very simple Fibonacci play somewhere around here like so. So this was exactly what the market actually felt at this point and then started to reverse to the downside. Yeah. Now going from the weekly time frame, this is also looking like a double top here. So both the euro and the pound sterling are giving technical bearish patterns, technically bearish patterns. However, this is not enough for us to make a trade call off of here. You still need to be very, very careful and then look out for if this market does actually go ahead to break the neckline. So let me just see how things look real quick on the daily time frame. So on the daily time frame, we are still we are broken out of this upward trend line like so. So from here to this point, seems to be out of the way now. So the only thing left is for these guys to actually break below here and then give us a decent pullback. Once we can get that, I think we are actually in business. All right. So my advice would be to allow the euro dollar drop a bit, let it go. Then on its way back, we're actually jumping into this share because right now as it stands, this 1.1068 region is actually exposed because there's literally nothing holding this guy back again. This is a double top on weekly time frame. Daily time frame seems to be giving us a downtrend. As you can see, this is a high, this is a low, lower high, lower low, lower high, lower low, equal highs, lower low here. So this is technically still bearish, heavy bearish. So yep. So that's just that about that. I would actually be very cautious as I go short on this pair like so, and let me see what the 4 hour time frame looks like. Real quick. And so on 4 hour breakdown, we actually seeing a minor supply level formation here. So my advice would be very, very simple: allow the euro just dip, let it just go. Yeah, then on its way back we can actually go short. So what you need to see is something like this: allow the market go, all right, then pull back nicely, then you short this guy. Okay, these kind of trades are always a lot safer for you. All right, safer for you in the sense that you're not trying to guess the market, you're just riding direction at this point here. So allow the market decide, and then you're actually in for money. So I think the next pair would be, let me see. So USD card is already en route from last week. I spoke to you guys about USD card that it was actually going to pull back in here and then reverse, and it's actually doing that. So we are a few pips away from hitting first take profit. So once if we're able to clear this first take profit here, this will actually expose us to the 1.14550 region. So I mean, exact same scenario here. What we need to see is very simple. Let the market go up nicely. All right, once it clears this this resistance point and then pulls back nicely to 1.4088 to 1.4080 like so, then we'll actually be looking to send this guy up higher. All right, so I don't think there's any stopping on USD CAD, to be honest. This market is really, really bullish, and I will not be surprised to see the market even continue higher. Okay. Now, for those of you guys who actually took the trade, we are just a few pips away from hitting first take profits, which was a very solid trade, I believe. And then crude oil. Crude oil is bearish at the moment, so crude oil is bearish. I'm still looking at this guy, to see if I can find a very, very decent entry. So recall, guys, I called out crude oil to $55 a barrel, and it's still looking like so. It's still on its way. So for me to actually take this trade, it's gonna look something like this. I need to see the market clear out this obstacle. Once it clears it out, then I'll be here. If I'm not here to let you guys know, the link to the pinned comment. So if I'm not able to let you guys know when this market is ready, the link to the Telegram community is in the pinned comment, like so. Be sure to check it out and then also join. But for crude oil, I'm actually favoring this guy to the downside to the tune of 80%. I do believe that in the event that we actually get this trend out of the way, this would most likely reverse all the way to $55 a barrel for crude oil. All right, so CAD JPY, there's nothing really much going on about CAD JPY here, unless of course this demand level here. So for these guys who actually love to trade the yen pair, yeah, this is a demand level they can play with. All right, so what you simply need to do is allow the market pull back nicely into this region at 108.187. Once you see a beautiful bounce from here, then you can actually go long here. This is also a Fibonacci point, and overall we're actually very bullish on CAD yen. So for these guys who like to trade the yen pairs, what you simply need to do is allow the market pull back into 108.500. Yeah, let us see a decent drop, a decent dip into this point here, bounce off of here nicely. All right, and then we'll actually go long on this pair. So that's my first case scenario. Now in the event that this level does not hold and then we see this market break below here, then this would most likely send this guy back down. Yeah, I think likewise for the dollar yen as well. So allow the market come back and test this demand level like so. So we hit the first take profit here. So this is the next thing now, is to allow the market come and test the demand level. Yeah, come and test this demand level at this point here like so. This is the place I'm actually looking for the dollar yen to pull back into here. So once I see a very decent pullback to 151.600, then I'll be here to let you guys know. And if I am not, kindly check the pinned comment, guys. The link to the Telegram community is there. Yeah. So by the way, guys, if you want to learn how to trade profitably like I do, so the link to the mentorship course is literally in the pinned comment. Check it out for yourselves, and then also check the Telegram community as well, where we actually send quality trade setups. Yeah. So I think AED USD, nothing much on this pair at this point. It just came off of a supply level and then started to drop. Yeah. I think my next pair will be the dollar. So dollar seems to be on its way up, okay, and higher. So my profit taking point will be, my profit taking point for the XY would be at 101.5. All right, so okay, 101.000. So that's where I actually intend to take my profit. You can see that the euro dollar is practically the inverse of the DXY. Where this guy's headed is where the euro is also headed in the inverse terms. Yeah. Now dollar Swiss franc hit break even because of FOMC decisions. Yeah. So actually placed a trade, and then the break even was, for some it was stop loss hit, for some it was a break even hit, and then next thing the market just started to point to the upside. Now at this point here, what you simply do here is that you just box this guy up nicely like so, because this is moving sideways. Allow it decide whatever direction it wants to decide. So if it's going to go higher, it will let you know. If it's going to go lower, it will let you know. But at this point there's really nothing you can do here, because the market is still not giving us a clear direction. So if it breaks above here, we're definitely going higher, and if it breaks below here, we're definitely going lower on this pair here. So that's just that about that. And I believe I've covered every single pair. Let me see if there's one more. I think the NZD USD also has a very beautiful setup to the downside. It's a beautiful one for those of you guys who are actually interested in NZD USD. The trend is quite clear to the downside. Yeah. So what you simply need to do is allow it break below here. So allow it clear this base. Once it clears this base like so, once it clears, get rid of this base like so. Yeah. So this will definitely send the market collapsing even further. Yeah, let me see what it's like on the 4-hour time frame. So yeah, so this is it. So allow it clear that base. So once it clears that base, we got space to the downside on NZD USD. All right. So I mean, just check out these pairs. Check out the mentorship program. It's literally the best right now. All right. So be sure to help yourselves. The year is coming to an end. There is no better way to start next year than to grab all the knowledge you need for your financial freedom. Yeah, you get me. So I think I pretty much covered every single thing for now. Be safe, and I'll catch you guys in my next screen. And there we have it, Forex traders. Once again, guys, the link to the mentorship program is literally in the pinned comment, like, so be sure to check it out, man. It's literally next to nothing. Save yourself the short of blowing an account and following all these gurus online, send you guys fake lifestyles. Come and hop on the mentorship program. I'm not here to market lifestyle, I market results. I market students results. You guys have seen it. We make money here, guys. Don't play with us, eh? There's money in this business. You just have to find the right guy, to be honest, and have the right mindset, and then get the right information. You make a lot of money from this market. All right, enough about that. All right, so be sure to leave a like and comment and turn on the bell icon as you subscribe, and then please share this video, spread the word, guys. There's somebody back on YouTube. Let the world know that Desmond is back on YouTube to do wonders. To do wonders, man, and to glorify Jesus in our trading, man. All right, so enough about that. So I'll catch you guys later. For now, trade safe, apply proper risk management.